Based on the historical data and forecast, Bitcoin has shown significant volatility with a recent downtrend. The RSI indicates oversold conditions on several days, particularly around October 13th and 14th with values of 36.7 and 34.7 respectively. The Bollinger Bands have been widening, suggesting increased market uncertainty. Given the forecast for the next week predicting a continued downward trend, initially, I recommend a short position with an entry price of $108,100. A stop loss should be placed slightly above the upper Bollinger Band to account for potential short-term reversals, at $108,000. The initial target price for this short position is $104,700, aligning with the forecast and the lower Bollinger Band. However, as the price approaches the support level of $100,900, and the RSI starts to show signs of recovery, we should consider shifting to a long position. If the price bounces off the support and the RSI moves above 40, enter a long position at $102,400. Set a stop loss at $100,900, just below the support level. The target price for this long position would be $107,700, near the center of the Bollinger Bands and slightly below the recent resistance. This blended strategy combines capitalizing on the predicted downward trend with a contingency plan to profit from a potential rebound off the support, optimizing for both risk mitigation and potential high returns. Based on the historical data and forecast, Ethereum has been experiencing a downtrend, particularly evident in the recent price action and the forecast for the next week. The RSI consistently falls below 50, indicating a weakening momentum. The forecast prices continue to decline, suggesting further bearish pressure. Considering these factors, I recommend a short position strategy. We will enter a short position at $3,850. The stop loss will be placed at $3,890, just above the recent forecast high, to protect against potential upward spikes. The initial target price will be $3,710, aligning with the lower end of the forecast range. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the upper band, it signals a potential short-term reversal, and we might consider closing the position or adjusting the stop loss. Conversely, if the price breaks below the lower band, it could indicate further downside potential, prompting us to lower the stop loss and potentially set a more ambitious target price of $3,600. The overall portfolio will be 60% short Ethereum, 20% in stablecoins like USDC, and 20% in a diversified portfolio of other cryptocurrencies to mitigate risk. This combined approach aims to capitalize on the anticipated downtrend while maintaining flexibility to adapt to evolving market conditions. Based on the historical data and forecast, BNB shows a volatile trend with periods of both upward and downward momentum. The price has bounced between a support level of $1,030 and a resistance level of $1,300. The RSI fluctuates, dipping below 50 on October 17, 2025, indicating an oversold condition, and reaching above 75 on several days, suggesting overbought scenarios. The Bollinger Bands also reflect this volatility, with the price frequently touching or crossing the upper and lower bands. Considering this, I recommend a combined strategy utilizing RSI and Bollinger Bands for optimal returns. My proposed portfolio includes 3 strategies. First, when the RSI falls below 20, enter a long position at $1,070 with a stop loss at $1,030 and a target price of $1,300. Second, when the RSI is above 80, enter a short position at $1,160 with a stop loss at $1,200 and a target price of $1,030. Third, when the price touches the bottom of the Bollinger Bands, enter a long position at $954 with a stop loss at $884 and a target price of $1,150. The most efficient strategy is the first one, so I will allocate 70% of the portfolio to it, 20% to the second strategy, and 10% to the third strategy. This diversified approach aims to capitalize on both bullish and bearish trends while managing risk effectively. Based on the historical data and forecast, XRP shows a clear downtrend. The price has been consistently moving downwards, and the forecast for the next week predicts further decline. The RSI consistently below 30 indicates an oversold condition, but the downtrend is strong. The Bollinger Bands also confirm this trend, with the price consistently below the moving average and approaching the lower band. Therefore, a short selling strategy is the most suitable approach. We will enter a short position at $2.31, placing a stop-loss order at $2.33 to protect against unexpected upward movements. The initial target price will be $2.2, aiming to capitalize on the predicted decline. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI rises above 30 and the price touches the lower Bollinger Band, we will consider closing the position at $2.2 and waiting for a potential reversal signal. If the price breaks above the stop-loss at $2.33, we will immediately exit the position to minimize losses. If the price continues to decline and reaches $2.16, we will adjust the target price to $2.06, maximizing potential profits. This dynamic approach, combining trend analysis with technical indicators, will help us navigate the market volatility and achieve high returns. Based on the historical data and forecast, Solana exhibits a downtrend. The RSI consistently remains below 50, indicating bearish momentum, with several days falling into oversold territory below 40. The forecast data for the next week projects continued downward pressure, with prices hovering around $186 initially before declining further to $172. Considering the support level at $175 and the Bollinger Bands, a short position is warranted. I recommend entering a short position at $186. The stop-loss should be placed just above the upper Bollinger Band at $247 to mitigate potential upward spikes. The initial target price is set at the support level of $175, offering a reasonable profit margin. To refine this strategy, we can incorporate the RSI. If the RSI reaches 20 during the forecast period, it signals an extremely oversold condition, suggesting a potential bounce. In this scenario, we could consider covering the short position or scaling back the size. Conversely, if the RSI approaches 80, it indicates an overbought condition and a potential reversal. We could then consider adding to the short position or tightening the stop-loss. The most efficient portfolio combines the trend analysis, Bollinger Bands, and RSI signals, providing a layered approach to risk management and profit maximization. This strategy aims for a balance between capitalizing on the prevailing downtrend while adapting to short-term fluctuations. Based on the historical data and forecast, TRON shows a downtrend. The RSI consistently dipped below 50, reaching a low of 32.2 on October 12, 2025, indicating oversold conditions. The forecast for the next week predicts a continued decline, with prices dropping to $0.296. The Bollinger Bands confirm this trend, with the price consistently trading near the lower band. Therefore, I recommend a short position. Entry price will be $0.31, with a stop-loss at $0.32, just above the upper Bollinger Band. The initial target price will be $0.30, aligning with the forecast. To refine this strategy, we will incorporate RSI signals. If the RSI falls below 20, we will enter a short position at $0.31. The stop-loss will be set at $0.32, and the first target price will be $0.30. If the price reaches the support level of $0.303, we will move the stop-loss to $0.305 to protect profits. If the RSI reaches 80, we will close the position and reevaluate. This combined strategy, leveraging both Bollinger Bands and RSI, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Dogecoin shows a downtrend, particularly evident in the recent price action and the downward forecast for the next week. The RSI consistently hovers below 50, with several days dipping into oversold territory, below 35, indicating potential weakness. The Bollinger Bands are also widening, suggesting increased volatility and a potential continuation of the downward trend. Therefore, I recommend a short selling strategy. We will enter a short position at $0.191, placing a stop-loss order at $0.195 to limit potential losses if the price unexpectedly reverses. Our target price will be $0.171, aiming to capitalize on the projected downward movement. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 20, oversold, it could signal a temporary bounce, but given the overall trend, we'll maintain the short position. If the price touches the lower Bollinger Band, it might indicate a potential short-term bounce, but we'll still prioritize the overall downtrend. We will adjust our target price to $0.183 if the price breaks below $0.185. This combined approach leverages both technical indicators and the broader market trend to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Cardano has shown considerable volatility, with a recent downward trend. The RSI consistently remained below 50, dipping as low as 28.1, indicating oversold conditions. The Bollinger Bands have been widening, suggesting increased price fluctuation. The forecast for the next week projects continued downward movement, with prices potentially reaching 0.557. Given this analysis, I recommend a contrarian strategy focusing on short-term rebounds within the downtrend. Specifically, we will implement a strategy based on the RSI, combined with Bollinger Bands for confirmation. Our strategy involves waiting for the RSI to reach an oversold level below 35, preferably around 33.4, which occurred on October 17, 2025. We will enter a long position at 0.625. The stop loss will be set just below the lower Bollinger Band, at $0.59, to protect against further downside. The initial target price will be the center of the Bollinger Bands, $0.769, providing a quick profit opportunity. If the price reaches this target, we will reassess the situation based on the RSI and Bollinger Bands. If the RSI is still below 50 and the price is near the lower Bollinger Band, we will set a new target price at the resistance level of $0.753. This approach combines the RSI's oversold signal with the Bollinger Band's volatility indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH has been exhibiting a downtrend, particularly noticeable from October 10 onwards with a significant drop to $4,050. The forecast for the next week indicates continued downward pressure, reaching as low as $3,930. Considering the RSI consistently below 60 and dipping into oversold territory, below 34, on several days, a contrarian strategy focusing on short-term rebounds is viable. We will implement a combined strategy utilizing RSI and Bollinger Bands. The entry price will be $4,130, coinciding with a slight bounce after a recent dip and the lower Bollinger Band touching $4,120. The stop loss will be set at $4,180, just above the upper Bollinger Band, to protect against a false breakout. The initial target price will be $4,220, aligning with the forecast price for October 21st. To refine the strategy, we will incorporate an RSI-based exit point. If the RSI rises above 65, indicating an overbought condition, we will close the position and secure profits at $4,220. Conversely, if the price reaches the support level of $3,990, we will close the position to minimize losses. This combined approach leverages both momentum indicators and price action signals for a balanced risk-reward profile. The portfolio will be 60% focused on the combined strategy and 40% on the RSI strategy, which is to buy when the RSI is below 20 and sell when the RSI is above 80. The final target price is $4,220, but it can be adjusted based on market conditions. Based on the historical data and forecast, Chainlink shows a clear downtrend. The price has been consistently falling from October 4, 2025, and the forecast for the next week indicates continued decline, potentially reaching $14.4. The RSI consistently stays below 50, with several days falling below 30, confirming the oversold condition. The Bollinger Bands are also contracting, suggesting a period of consolidation before a potential breakout. Considering this, I recommend a short position. Entry price should be $17, with a stop loss placed at $18.9 to protect against a potential reversal. The initial target price is $16.1, aiming for a quick profit from the predicted decline. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. When the RSI falls below 30, it indicates an oversold condition, providing a potential entry point for a short position. The lower Bollinger Band acting as a dynamic support level, and a break below it strengthens the bearish signal. Therefore, I propose entering a short position at $17, placing the stop loss at $18.3 just above the lower Bollinger Band. The first target price is $16.1, coinciding with the forecast price. If the price breaks through this level, the target price can be adjusted to $14.4, capitalizing on the projected downtrend. This combined strategy leverages multiple indicators for a higher probability of success. Based on the historical data and forecast, NEXO has been fluctuating within a range with a support price of $1.1 and a resistance price of $1.18. The RSI has been oscillating, indicating periods of both overbought and oversold conditions. The Bollinger Bands show periods of volatility. Considering these factors, I recommend a strategy that combines RSI and Bollinger Bands to capitalize on short-term price movements. The forecast data suggests a potential downward trend, with prices decreasing to $1.12. Therefore, I suggest a short position strategy when the RSI falls below 34 and the price touches the lower Bollinger Band. Specifically, when the RSI drops below 34, indicating an oversold condition, and the price hits $1.12, enter a short position. Set a stop-loss order at $1.17 to limit potential losses if the price rebounds. For the target price, aim for $1.05, which is a reasonable profit target considering the current support level and the downward forecast. This strategy aims to profit from the predicted downward trend while mitigating risk with a well-placed stop-loss. The portfolio should be 60% short position, 20% long position when the RSI is above 80, and 20% cash. Based on the historical data and forecast, VeChain exhibits a downtrend. The RSI consistently fluctuates below 50, with several days dipping into the oversold territory, below 30, indicating potential shorting opportunities. The Bollinger Bands show a narrowing trend, which suggests an impending price breakout. Considering the forecast prices are consistently around $0.0172 to $0.015, the support price of $0.0162, and the overall bearish sentiment, I recommend a short-term short position. We will enter a short position at $0.0171, placing a stop-loss order at $0.0176 to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.015, aiming to capitalize on the predicted downward movement. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. When the RSI falls below 30, oversold, it signals a potential bounce, but given the overall downtrend, we'll use it as a confirmation for entering a short position. If the price touches the lower band of the Bollinger Bands, it suggests a potential bounce, but we'll prioritize the RSI signal. Therefore, we will adjust the strategy to enter a short position when the RSI drops below 30 and the price is near the lower Bollinger Band. The final portfolio will be a short position with an entry price of $0.0171, a stop-loss at $0.0176, and a target price of $0.015, combining RSI and Bollinger Band signals for increased efficiency. Based on the historical data and forecast, POL-Xmatic shows a downtrend. The RSI consistently remains below 50, with several days dipping into oversold territory below 30, indicating potential downward pressure. The forecast for the next week projects further declines, with prices consistently below $0.19. The support price is $0.173, which has been a consistent level. Considering these factors, I recommend a short position strategy. We will enter a short position at $0.186. The stop-loss will be set at $0.187, just above the recent forecast price, to protect against a potential rebound. The initial target price will be $0.179, aligning with the support level and the lower end of the forecast range. To refine this strategy, we'll incorporate Bollinger Bands. When the price touches the lower band, it suggests a potential bounce. However, given the overall downtrend and the forecast, we'll maintain the short position. If the price reaches $0.167, which is the lowest point in the forecast, we'll adjust the target price to $0.167. This combined strategy, prioritizing the downtrend and incorporating forecast data and Bollinger Bands, offers a high probability, high return opportunity. The portfolio will consist of 70% short position and 30% cash. Based on the historical data and forecast, IOTA exhibits a downtrend. The price has been consistently below the Bollinger Band center, and the RSI has spent a significant amount of time below 50, indicating weakening momentum. The forecast for the next week predicts a continued decline, with prices hovering around $0.131. Considering these factors, I recommend a short position. We will enter a short position at $0.143. The stop loss will be set just above the upper Bollinger Band at $0.143 to protect against a potential short-term reversal. Our target price will be the support level of $0.118, offering a substantial profit margin given the current downtrend. To refine the strategy, we'll incorporate the RSI. If the RSI reaches an oversold level of 32.3, we will tighten our stop loss to $0.138. If the RSI rises above 50, indicating a potential trend reversal, we will close the position to minimize losses. This layered approach combines trend analysis, Bollinger Bands for volatility assessment, and RSI for momentum confirmation, creating a robust and adaptable investment strategy. The portfolio will be 70% short IOTA and 30% in cash to mitigate risk. Based on the historical data and forecast, Conflux has shown significant volatility with a clear downtrend, particularly evident in the recent drop to 0.0991 and subsequent fluctuations. The forecast for the next week projects a continued downward trajectory, with prices potentially reaching as low as 0.0893. Considering the support level at 0.106 and the RSI consistently below 50, hovering around the oversold territory, below 30 on several days, a short position appears strategically sound. Therefore, I recommend entering a short position at $0.104 with a stop loss at $0.113, just above the recent high and support level. The initial target price should be $0.0971, aligning with the forecast for October 21, 2025. To further refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading near the lower band suggests further downside potential. If the price approaches the upper Bollinger Band, around $0.106, it could indicate a potential reversal, triggering the stop loss. However, given the overall bearish trend and forecast, maintaining the short position is favored. After reaching the first target of $0.0971, consider a trailing stop loss at $0.0935 to protect profits and potentially capture further downward movement. The combined RSI and Bollinger Bands analysis, alongside the bearish trend, provides a robust framework for a high-return short investment strategy. Based on the historical data and forecast, Theta network shows a downtrend with significant volatility. The price has been fluctuating between the support level of $0.537 and the resistance level of $0.686. The RSI indicator has spent considerable time below 50, indicating a weakening momentum, and recently dipped below 30, signaling an oversold condition on several days. The Bollinger Bands show that the price has been approaching the lower band, suggesting potential for a rebound. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. The entry price should be $0.526, coinciding with the first day of the forecast period and a lower Bollinger Band. The stop loss should be set at $0.476, just below the forecast low, to limit potential losses if the downtrend continues. The initial target price is $0.537, the support level, offering a quick profit if the price bounces back. If the price reaches the support level, we can adjust the stop loss to break even and set a second target price at $0.602, near the previous resistance. This strategy combines oversold RSI with Bollinger Band support, aiming for a high probability, short-term trade with clearly defined risk and reward parameters. Based on the historical data and forecast, Bittensor demonstrates a volatile trend with periods of both upward and downward momentum. The RSI values fluctuate significantly, ranging from oversold territory, below 20, to overbought territory, above 80. Considering the recent upward trend and the forecast prices for the next week, I propose a bullish strategy. We will enter a long position at $357, coinciding with the first day of the forecast. The stop loss will be set at $335, slightly below the forecast low, to protect against potential downside risks. The initial target price will be $378, aligning with the support price, offering a quick profit opportunity. To refine this strategy, we will incorporate the Bollinger Bands. If the price breaks above the upper band, we will adjust the target price to $411, capitalizing on the upward momentum. Conversely, if the RSI dips below 30 and the price touches the lower Bollinger Band, we will exit the position, securing profits or minimizing losses. This combined RSI and Bollinger Bands approach provides a dynamic and adaptive investment strategy, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Dash shows a strong upward trend, particularly evident in the price surge from October 11th to October 17th. The RSI consistently remained above 60, reaching an overbought level of 83.0 on October 12th, indicating strong buying pressure. The forecast for the next week projects continued upward momentum, with prices ranging from $44.9 to $46.6. Considering these factors, I recommend a long position with an entry price of $44.5. A stop loss should be placed just below the support level at $42.2 to mitigate potential downside risk, setting it at $42. The initial target price should be $46.6, aligning with the highest forecast price, but a secondary target of $50 can be considered if the upward trend continues. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently traded above the upper Bollinger Band during the recent uptrend, suggesting a strong bullish momentum. Therefore, if the price dips to the middle band around $44.5, it presents a favorable entry point. We will maintain the stop loss at $42. If the price breaks through $46.6, we will adjust the target price to $48, capitalizing on the continued bullish trend. This combined strategy leverages the RSI for identifying overbought conditions and the Bollinger Bands for confirming trend strength, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Zcash shows a strong upward trend. The price has consistently tested and bounced off the support level of $42.9 and recently reached a high of $291. The RSI has fluctuated, dipping into oversold territory briefly but generally remaining above 70, indicating bullish momentum. The Bollinger Bands have widened significantly, suggesting increased volatility and a potential for further price movement. Considering the forecast for the next week, with prices ranging from $242 to $259, I recommend a long position strategy. We will use a combination of RSI and Bollinger Bands to maximize our returns. My strategy involves entering a long position at $242 with a stop-loss order at $236. The initial target price is $248, aiming to capture a quick profit from the predicted upward movement. We will then adjust our stop-loss to break even at the entry price of $242 to protect our capital. If the price continues to rise beyond $248, we will move the stop-loss up to the center of the Bollinger Bands, which is currently around $245, to lock in profits and allow for further upside potential. This dynamic stop-loss strategy will help us maximize our gains while minimizing potential losses. Based on the historical data and forecast, Ethena demonstrates a strong downtrend, particularly evident from October 10th onwards. The RSI consistently remains below 50, often dipping into oversold territory, supporting a bearish outlook. The forecast for the next week projects further decline, with prices hovering around $0.352. Considering the support level at $0.403 and the recent price action, a short position appears justified. We will implement a strategy based on RSI and Bollinger Bands. The entry price for a short position will be $0.393 on October 18, 2025 Saturday. The stop loss will be set slightly above the upper Bollinger Band at $0.403 to mitigate potential short squeezes. The initial target price will be $0.352, aligning with the forecast for the week. To refine this strategy, we will incorporate Bollinger Bands. If the price touches the lower Bollinger Band, we will consider tightening the stop loss to $0.377. If the price reaches the target price of $0.352, we will evaluate the market conditions. If the RSI indicates continued oversold conditions, we may extend the target price to $0.349. However, if the price shows signs of reversal, we will secure profits at $0.352. This layered approach allows us to capitalize on the downtrend while managing risk effectively, aiming for high returns with a clear entry, stop loss, and target price structure.